And it's time to take a look here at the weekly commodity market recap with Darrell, Holaday, Country Futures in Frankfort, Kansas. I'm Clay Patton here on the Rural Radio Network. Well, Darrell, as we come into the end of the week, corn, wheat higher, soybeans a little softer, albeit on Friday. Soybeans had all the data, no crush numbers, flash sales coming out. But it feels like this week as a whole, though, the fundamentals aside, macro market driven, all on the word of the Fed. What do you make of the trade?
No, I'll agree with that last comment. I think that was the primary factor. Yes, we did have good export activity again in the soybean complex, but I know it seems strange, but we're seeing good numbers, but we're certainly trailing last year by a chunk and trailing where we need to be to meet the USDA pace. But I think there's probably on the soybean complex specifically, I think that you would have to find a consensus that they've got our U.S. crush too low, and I think they've probably got our exports too high for crop year, and that makes sense to me. So the ending stock numbers can all be about right, and so that's kind of we trade back and forth, very kind of holiday trade. But the macro outlook or the macro situation off the Fed really kind of dominate at least the psychology or the talking points maybe at midweek on to the end. Some people talk about, well, we had this big break in the dollar, on Wednesday and Thursday, dollar index, and we did. Don't get me wrong, but that dollar retreat actually started November 1. But this just accelerated it here because the Fed's indication that, they think they've done their work, don't need to raise interest rates again or don't anticipate it, but you never know. They're not taking it off the table. But there's going to be other work to do. One of the concerns would be you got all this debt, $33 trillion of U.S. debt. How's that going to be financed? Well, somebody's got to step to the board and buy those bonds. That'll support interest rates. So it isn't all about the Fed interest rates. The market will take over on the interest rate front. The real question I think that's out there is what's going to happen to with their money supply. Are they going to continue to be somewhat of a hawk on the money supply? And if that happens, you're going to then see the dollar stay strong. On the other hand, if they go, well, the only way we're going to finance this debt is we're going to have to go back to increasing that money supply and increase our assets on the balance sheet. By doing that, then that would weaken the dollar. So I would say once the U.S. dollar checks the 101, the dollar index checks the 101 level, you will find it'll be somewhat interesting. Other than that, not a lot of news. Weather, still probably two big factors. One, in the big picture, one of the most impressive systems I can remember for December, moving across central and southern plains this week, big rains. And for it to be in December and not really include any significant snow is quite amazing. A lot of 2 to 3 inch totals, some totals over 3, all the way down in the Texas Panhandle, a lot of Texas, Oklahoma, Kansas, with just a bigger system. The models did a nice job of picking that up 10 days ago, and it really held together and was bigger than expected. And we got more next week. The Brazilian situation is a tougher deal. Still a lot of concern about the central northern Brazil areas, the Mato Grosso, the Bahia area. Those are key areas. They're still too hot. They've been too dry. They're about half the normal rainfall, but in the 6 to 15-day outlook, there's promises of more rain or increased rainfall. And a lot of other areas in Brazil are pretty good, but that's a pretty big region, and that supports the bean market, and the upfront demand is really good as a whole on the soybean complex. It's still a product that deems a lot of demand on the soybean oil side and the soybean meal side, a lot of that coming on the soybean oil renewable diesel side, too. On the week, March corn 482 down 3, new crop December 511 down 1 on the week. January beans were up 12 at 1316. The November beans, November 24, up 6 at 1276. On the wheat side, under pressure on the week, down 17 on the March Kansas City wheat, and the new crop July down 18 at 652. So again, a lot of pressure at one time. I think the rain system probably provided some of that selling pressure, but it did bounce on Friday, get some of it back. But there's still good demand, especially on the soft red winter, with still thoughts China maybe buying a little bit more from the U.S. Livestock, the big news there was we had a lot of when we started the week, we had pretty negative psychology surrounding the cash markets of both cattle and hogs. It felt like we were drubbing through a very tough time. Fewer slaughter dates, we're in the holidays, but we also mentioned many times this week early that it was going to what's going to pull us back out of this thing on the future side would be some turn in the cash that might be better expected. And that's really what happened this week is, we had Packers bidding down 65, 66, not much going on, and then 68, a couple Packers coming in on Friday, but that was still $2 to $3 lower. But late in the session, they may move their bids to 170 to get cattle because people would sell them at that lower number, and that really rallied the futures, and that gave us the stronger close primarily on the week. Feeders were stronger also late in the week because of what's going on in the country. So I would say the country news rallied both all the cattle and the hogs. The hogs the same way, as we're starting to see those cash values get better, the pork product better, numbers lighten up a little bit, and that's why we got February, the cash index settled out. And February hogs like to trade $3 to $4 to the low in the index, and so they kind of straightened out that seasonal as we came to on Thursday and Friday. On the week, the December cattle up 277 at 168.22, February 169.35 up 362, January feeders 220.90 up 560, March feeders 222.17, 610 higher, February hogs 71.90 up 292, and the April hogs 78.62 up 250.
And that again is Darrell Holaday, Country Futures, Frankfort, Kansas. The number to reach him, 1-800-292-4038. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.